Eric Mother at mother.com with a follow-through video on the 50 crossing on the daily for the major averages. So right now we are looking at the NASDAQ, which is down the most among the three major averages. In fact, let's take a look here at where the markets are trading. Hope you can see here we are seeing that the Dow is down about 0.11%, NASDAQ is down 0.58%, and the SPX is down slightly, down about 2.26%. So slight move lower, but the key here is what we had discussed yesterday and early this morning pre-market, when the markets were trading higher before they open. And we are still looking at the possibility, even midday here, now that the NASDAQ, which closed with its daily RSI at 51 yesterday after yesterday's nice up move here. So now we are seeing early signs, very early, that this day could turn to be a down day, or maybe around here is where the market stalls. And just to show you what the other averages are doing, let's take a look at the SPX. And again, go back to what we've been saying the last 24 hours or so, that you're better off looking for reasons to play the market for a pullback. So here's the S&P 500 right now slightly down, trading at 52. And we take a look at the Dow. And in looking at this way of approaching the market, you'd ask questions later. Right now we are also seeing that the Dow is still trading above 50 at 53. Yesterday we had a big move on the Dow because it moved its daily RSI above 50. So around here, based on the things we've been talking about, you are better off setting yourself on the downside or expecting a little bit of a pullback. And the magnitude of the move lower should be probably somewhere in the 200 to, let's say, maybe, yeah, I would even say 500. The magnitude of the move should be something in between this range here, because market's been trading down over the last couple of months, about 2 months here. It's been trading with its daily RSI below 50, excuse me. And what we see here is on the way down, if the market cannot hold above the 50, when it moves back below 50, so as to respect the bearish look of the market, it tends to reflect with a big down day as opposed to a big up day when it's moving above 50. So let me try and explain that again. I mean, it's a little bit confusing. In other words, because the market is a little bit on the bearish side, the down days are going to be more magnified than any up day, is what I'm trying to say. And all this points down to the same thing we've been saying in the last 24 hours, is if you draw a line connecting the previous break, this is coming into play right now. This might take a day or two, maybe 3 days, but as long as the market is showing that it is stalling on that line, which we talked about, which is resistance, and also on this line here, which is resistance, one can expect that around here there's a pullback. In fact, what I would like to do is take a look at let's go back about 2 years on the NASDAQ, on the Dow here. I guess the Dow, we're using the Dow on this one. Just want to take a look at this line here. Well, I guess I can draw it this way. Now at some point we're going to get into how I'm drawing this line, but for now just take it for what it is. What I'm doing is using the previous market behavior to draw this line. So I know that if I draw it there, it makes a lot of sense. In fact, even if I was to take this high here and extend it out. So those two lines make sense, and I'll explain that in a second. And it's a curious line. If I draw it right there, it gives us a lot of information as to how markets have been behaving. Ever since we broke through here, which was in November of 2015, somewhere around there, market's been struggling. We are again moved back below the blue line there for the highs there. Market's been struggling since then. So that was struggle point. We hit that level there in mid-December for the highs right there. We hit that at the end of December for the highs right there, and the market responded with a relatively huge plunge as we began the year. Now we are coming back to test that same line. So there's another level of resistance where it would make sense for the market to struggle, is what I'm trying to say. Now I'd like to show you another view which is consistent with what we are saying here. It's just And what I'm getting at here is using the chart itself to help you understand what's going on. The market is very confusing by itself. And so what you're doing at the very least, or at the best, in my opinion, is using the characteristic and behavior of the chart that you're studying to tell you what's going on. So I'm going to change this a little bit. And what I'm going to do is we're going to look at the previous breakout short term. So there was a breakout here. And this line that I'm drawing connects nicely with the highs, of course, there on the RSI. Connects the highs there and the high there. And of course, we had a breakout right there at some point, let's call it in 2015, for a nice move that began here to these highs. A very big move. So if we take that line, which happens to be slightly above the 50, like that, you see a lot of information here. In my opinion, is a lot of information. I'll explain that in a second. Staying above that green line represented this move here. The very instant we went below that line here represents this move down. Hope that makes sense. And so in essence, the market has come back to test the green line, which is the previous break line. If this is confirmed as resistance, that's another interpretation as to what the market is doing. Remember, we are not trying to be too cute. We are using the chart itself to talk to us. We're not even looking at price. And this is the beauty of why I like to study the RSI. We're not even concerned with price because we are more concerned with the sentiment. And you can see here, this breakout was a good entry, and now it's become resistance. You can see clearly here the most recent highs with uniform activity have come on this line. And the fact that we are here just sensitizes us to the fact that the next swing trade, in my opinion, for the market is down, and one should have positioned themselves around here. And the best way to do it is to go in portions. In other words, if you're going to buy 100 shares of a position on the bearish side, maybe you can split that 3 times, and of your position, right? So that you can give yourself an average entry price. You don't want to be, and I like to say this so as to crystallize what I'm trying to say, you don't want to be approaching the market with what might be termed as arrogance. Because if I make only one trade for a position I'm interested in, I'm trying to tell the market that I am so confident that I can't be wrong. And yet we know the market is volatile. So you're better off, in my opinion, somewhere around here looking for entries. And you can buy it in 2 portions or 3 portions or 4 portions. But at the very least, you don't want to buy in one bulk trade, because bulk trades just tend to be full of timing errors. Anyway, I'll stop right there. Of course, we'll look at this video in the coming days, coming weeks, and see whether all these lines that did show resistance and are coming in contact with exactly where the RSI is trading right now, all these lines seem to be suggesting around here we are better off positioning ourselves short. Eric Mwadid, Mwadid.com. As always, good luck. Let me know if you have any questions. Peace and blessings. And let me just show you where the markets are trading. Right there. February 18th, 2016. Peace. I am out. Mwah.